One thing's for sure, everyone has an opinion about Nvidia. The chip giant set to report fourth quarter earnings Wednesday after the bell. You might have heard. But it did also make some news today, announcing it's extending its partnership with Cisco in a push aimed at making it easier for corporations to deploy AI systems. A lot of businesses remain in the early stages of adopting AI systems because of the complexity the shift adds to their data centers. So Cisco and Nvidia said Tuesday in a joint statement they're rolling out and broadening the list of products that include each other's technology in an attempt to remove those hurdles. Joining us now to talk about all of this, Daniel Newman, Futurum CEO, who has his own opinions about Nvidia also. Good to see you, Dan.
Thanks for having me.
So we got this Cisco Nvidia announcement. It's interesting, it's coming out the day before earnings, and it's sort of like, AI is intimidating. Let us make it easier for you. Is that kind of the vibe of the partnership here? What do you think?
Yeah, so I mean, we talked, I think, last time I was on the show, actually, about enterprise being this next big opportunity. And the enterprise, there's a ton of complexity. And of course, we hear all about AI and hyperscale. And when we eventually get around to talking about the earnings, we're going to talk a lot about what the hyperscalers are doing and all the CapEx. But in the end, there's this whole other market, which is the enterprises and their investment, their implementation of AI. And of course, there's the InfiniBand and the Ethernet argument. Mm-hmm. And so there's going to be a lot of networks set up for AI that are going to run on Cisco infrastructure. So it just made a lot of sense. Now the timing, I mean, look, Nvidia earnings is a national holiday now in its own way. So if I were going to put out news, it's never a bad thing to put it right ahead of an earnings day for Nvidia.
Let me ask you, so heading into this print, Nvidia stock has done a whole bunch of nothing so far this year. It's done something, it's down about 5%. Why, if you were to bullet point the reasons why that is, the reasons of concern, what would you say they are?
I think some of it was about people really ran out ahead. They saw what was happening and they started buying up and bidding it up. And it got out in front of its multiple pretty aggressively. Now it's actually trading at what I think is a relatively good value from where it's at and where its potential is, Josh. The thing is the market has digested this. The market has accepted that Nvidia is the early winner. And by the way, $3 trillion market cap is not an underwhelming number for a company that is really still implementing the infrastructure of a technology that most of the revenue is going to come in the future. And I'm not talking about Nvidia's revenue. Their revenue's now. I'm talking about this whole infrastructure conversion to consumption that we keep talking about. They're building, and the question is, are these ghost cities in China? I don't think that's the case. But when does all this investment start to print dollars?
When does all this investment slow down is the other question, right? We got that report from an analyst who said they were doing channel checks at Microsoft and found maybe the infrastructure spending was slowing.
Yeah, the TD Cowen report that came out, I think it was a little misleading. And the funny thing is every time one of these reports that come out that kind of call the early demise of AI, it ends up being an accelerant for more GPUs.
Well, listen, they weren't calling for the demise. They just said maybe it's not as absolutely gargantuan as expected.
But some of the refuted, besides Microsoft itself refuting and talking about their 10-year horizon, I think Dylan Patel also came out because he was actually running some of the numbers. And he said that their actual expected investment, if they had gone ahead with every contract, was well above that 85 billion CapEx number. So I think they were pulling back on some. Stargate is, of course, a factor. That's going to sort of change the direction of all this investment. And the sort of tenuous OpenAI-Microsoft relationship. I mean, Microsoft was building out for OpenAI, but OpenAI is going to build its own silicon. OpenAI is going to build potentially its own data centers. It's involved in this Stargate project. I think Satya has been pretty grounded in his communications about how he sees this. He sees, yes, we have to spend for this next 10 years, but he's also kind of come out and said, the revenue's not here. We are getting ahead of ourselves. What do they have, 13 billion revenue on a 85 billion expected CapEx this year?
Yeah. Dan, let me ask you, when that Nvidia print hits tomorrow, crosses the wire, I'm just curious, what are the data points, the metrics in that report you make a beeline for?
Yeah, I mean, the first thing people are going to be looking at is how that margin integrity is holding up. That margin number has been a big part of what's driven it over $3 trillion. I think another big part of it is going to be any sort of communication about the Blackwell ramp. It's not totally clear how much that shipping has kind of hit capacity, and are there any constraints in their Blackwell ramp? Because I think there's kind of this mixed belief. Some people are like, it's fully shipping, it's fully ramped. Other people are hearing there's some heating issues. What's true? And then, of course, I think everybody here will agree, the guide. over the last 4 quarters, each quarter the guide has been a little less aggressive. They've been great. They've been big beats and they've been raises, but that raise from like quarter to quarter has gotten narrower and narrower, making it even more necessary, Josh, that it's perfect. The guide is perfect. I think the whole market is on stilts. And I think if Nvidia comes up anywhere short, even a mediocre guide, I'm really worried about what's going to happen for growth.
I mean, last time the stock didn't do much. The time before that, it fell about 6%. Both of those times, the S&P didn't do much of anything. So, we'll see. I mean, the other thing we have to look for, it's not going to be in the statement likely, but will be in the conference call, is discussion around DeepSeek, right? And we talked to analyst John Vin of KeyBank yesterday, who's confident that the chips that go into DeepSeek, which I think are the H20s, he expects an uptick in demand for those. But I imagine that's a lower margin product than Blackwell, right?
And there's still a lot of uncertainty around H20. There's still a lot of uncertainty around what Trump is going to do with chip controls. And there's still a lot of question marks around the entire DeepSeek proposition and what happened there. What we did learn for sure from DeepSeek is that the more efficient model will actually lead to more GPU demand. That we are, I think, at less than like 0.1% of the consumption of AI. Now, the infrastructure build, we'll keep talking about that, is happening. But when we learn how to build more efficient models and we learn how to make the infrastructure work more efficiently, I think that scale up is going to happen really quickly. And so DeepSeek, we did learn a lot from, Julie, but I do have a lot of concerns that we still really don't know what happened there, and that the actual infrastructure that we were told versus reality, I'm not certain. And then, of course, all the Trump sort of politics going on between us and China and what's going to happen there. I mean, no wonder that the broader market is super uncomfortable. And this is the most uncomfortable I've seen the market broadly about AI since the sort of first big boom around the ChatGPT launch.
So very on stilts. I like that. We're on stilts. Dan, thank you. Good to see you.
Thanks for having me.